Today's number is 42. One of our favorite investments of the last 6 months is finally getting closer to those 2011 levels. So, how much better can this get? And why did the market go positive gamma across the board over the last 24 hours? The inflation figures weren't that good, so how is this even possible? Well, we'll demystify what exactly is going on and why you need to be paying attention to these breakouts right now in so many different pairs. It all kind of started with Bitcoin. Let's take a look at stocks, commodities, and cryptos right now together. Guys, don't go anywhere. There's a lot to get into. Well, welcome back everybody to The Daily Show. My name's Thomas Atkinson, and in today's video, we have a lot to discuss as always. The latest macro, the data, and of course, the options moves, because that got us into positive gamma, and it pushed so many different market segments as breadth improved even in the face of adversity. So let's go through this US inflation number, because on the surface of it, you're probably scratching your head saying, how are we going up when it looks like inflation's coming back? Well, it's all about what the market actually looks at. And I think this chart here from Duality Research is pretty key, which shows you that we've kind of seen further declines in inflation that's over 4% in any particular sector. Now, this actually marked pretty close to the lows of 2022 and the beginning of this bull market. But what you can now see is that things over 2%, so between 2 and 4%, have started to really increase. They're at about 72%. So inflation is certainly moderating and going up again. And according to this chart here from the BLS, you can see that percentage of items with 3% price growth has actually increased in recent months to almost 60%. So if you were charting this, you would say, yes, it looks like we've got inflation coming back. And it's in all sorts of different sectors, some of them not being what people would expect. One of those, of course, being the used car market, which is actually only very small weight in the CPI, but made up 9.3% of the increase. So what people are doing is they're obviously going out and they're saying, you know what, I'm not going to buy these new cars. They're too expensive. There's too much cost involved in them. Instead, I'm going to go try to find me a bargain on the secondhand market. And this is, of course, a huge change, funnily enough, coming with motor vehicle repairs, a huge change from where we were just a few years ago. And you'll see with a Google search that we just found today why that may be happening. It's kind of almost a worrying event, but not right now in the markets. Remember, the macro side or the economy and the stock market, they're different things. So, of course, when you're looking at if the US is starting to struggle a little bit, maybe in certain areas, but if you're looking at the markets, the flow looks pretty strong, and we'll talk about that soon. So what about this rally? Well, it's the third largest and fastest on record. You can see here COVID and GFC were the only other two. And what that usually marked was the bottoming and beginning of a new massive bull market run. Now, I'm not sure we're at that kind of thing, but you will have heard a lot of people saying about it at the moment, the beginning of something huge. And what I think it is more the beginning of mass speculation. And we're seeing that with certain stocks going up, between 40 and 60% in like just a couple of sessions. And that's the type of stuff that does get you into the twilight zone. But it's time to be careful, but still follow the trends. And the trend is currently, of course, still bullish. Although, in Q3, you've got to expect anything. We know that this is the volatile period of the year. Year-to-date highs on the NASDAQ, you can see new highs over lows, and the small caps have been also starting to improve. A few of you caught what I said yesterday about these in the comments down below. It was pretty funny. But yeah, small caps, guys. And they have been improving. And more importantly, over the last 24 hours, we will have seen the advanced decline lines, which you can see here. These will have actually broken up a little bit, which kind of signifies further broadening formation in the market. So it's not necessarily a weak thing coming into what we all expect is going to be a Federal Reserve rate cut. So where does Wall Street see the biggest upside targets? Well, you can see here from Gainify, they've gone through and found all the kind of average targets from Wall Street. And some of these are interesting ones because you've got things like Salesforce, you've got Adobe, which just gave its earnings result. I think it was up about 2 or 3% after hours. Some of these are on kind of like support levels as well. Have a look at these upsides that Wall Street believes is there. Remember, you do not focus on just the analyst upgrades or anything. You focus on the flows, the change, look for the actual signs in market structure for them to actually be picking it up. But still thought I'd add it because, of course, at the moment we are seeing a bit of a breakout. Another one is whether we can see Nvidia go back into extreme growth again and get back to where it's been traditionally, which is trading over the last 5 years at 41 times earnings. Remember, there are stocks out there that are trading at 50 times earnings that aren't even growing by that much. So the question is, will we see the big kahuna, being Nvidia, actually start to lead once again? If it does, that's going to be a big deal. And semiconductors did have a big breakout. So we'll check that out because there were a lot of new highs. Sure, they could be traps, but at the moment, it doesn't look like it with the positive gamma. Let's have a look at these Google trends. Google offers, of course, a tool that enables observing employee strife firsthand. In my case, I actually use this more for people searching the word bubble. And let's just say bubble has astronomically gone up over the last couple of months. And that tells me that we're in that final chapter where, remember, markets don't really crash during the word bubble. They crash when peak euphoria overtakes that point. So you can see here, Google Trends reveal a largely unfiltered sample of actual search requests to Google. The sample below paint a bleak picture. And I guess it is kind of bleak when you look at it. Look at this, give car back. Hopefully none of you guys are searching this one here. Going to the highest ever search term for that ever recorded since the beginning of all of this. Sell my house fast. That seems to be spiking big time recently, maybe in the Sun Belt. I'm not sure, but it's happening. Borrow against stock. That could be just a couple of apes. I'm not sure what's going on there, guys. Bankruptcy lawyer. Whoa, that one's really worrying, yeah? Sell my Rolex watch. I actually kind of almost laughed at this when I saw it because if you actually look when the last time sell my Rolex watch was around, it was basically around that global financial crisis, but that has skyrocketed in recent months. So I don't know if the watch market's doing too well at the moment, guys. And then, of course, borrow against my life insurance spiking again, probably coming off the back of maybe a 2020 number originally. So some interesting stuff here. We will be tracking this. If you enjoy this type of content and data, make sure to subscribe to the channel. It does help to gain an overall picture, but I think all of you guys on the ground, you know that things are getting a bit tight and tough. But again, the economy and the markets are a little bit different. Now, what's been benefiting from all of this? Well, one of our favorites, of course, has been gold. Silver just about to hit 42. Yes, guys. I told you it was looking pretty good back in those 20s, back in the 1920s, you know, when we were looking at silver this year, and it's been pretty damn good. Now, why is this? Well, it's central banks. Central banks around the world have been purchasing gold, they've been purchasing other precious metals, and more importantly, people are just losing faith in fiat. Kind of similar to what happened back in the past, and it's because people are starting to kind of wake up to, you know, maybe we need money outside of the system. That's the general claim. You will have seen videos with people saying, got to get money outside the system, whether it's Bitcoin or DeFi or some other gold, silver, precious metal, bullion, something holding somewhere. Yeah, I think that's all part of it. But I would say one thing about that is if there is a liquidity crisis or a credit crunch, do not believe those things will hold initially. You'd be surprised. Cash may become king, at least initially. Remember, the large majority, not just you guys out there, all of us watching these types of videos, the large majority of people are going to be like, I need that cash money instantly. So you've got to understand kind of how the system will work. Gold would still fall. So would Bitcoin. They may pick up faster, but you've got to remember they will have extreme volatility during those crisis events. After all, you cannot really eat gold, or can you? Goldman Sachs forecast for the S&P 500 price and EPS. 12-month target 6,900. Obviously, these guys are all upgrading across the board. They are seeing earnings coming through. You can see here this chart via Mike Zaccardi and Goldman Sachs kind of just shows that these big bank institutions are all upgrading. And that takes us on to the path of the general bull market, which is so far following all normal paths. So when do you want to be panicking? Maybe month 46 to 50. We will update when we're there, but at the moment it is running pretty normally. And although this year doesn't look like the standard, you know, kind of nothingness year like it has been usually in third-year bull markets, it kind of is, because when you smooth it, you can kind of say, yes, we're up, but we still have chance for a pullback in maybe October, which you'll see why. And yeah, overall, I think, you know, if this does follow the trend, then year 4 could be pretty wild as well. So 2026, markets going into it, feeling at least bullish for now, but it's really just because it's a dull market driven by stimulus. We know the Fed is going to have to come out and stimulate. And this is not cool if you want the normal market to take over, but if you want to just be bullish, it's not too bad. Now let's have a look here at October. This is the month that may be bad according to Wayne Whaley. Now this is with updated at the time results, and that's the good thing. It's updated with current year statistics, which is that we just had a June to August 5% summer on markets. That usually means that where's the pain? It often shows up in October. It's not going to be too painful, I don't think, but if it's going to show, it's going to show around there. Now let's jump into the charts. First up, S&P 500 clawing its way to 6,600, which we suspected it would. Why? It's options. And this is all about positive gamma and all about basically markets climbing the wall of worry. Look at the advanced decline line, guys. It's up, 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 up. There's no reason to say that is bearish at this point when we're looking at those types of charts. US 500, here are the upgraded high-low levels, guys. So you can kind of see we're in that uncharted territory. And of course, we're all going to know based on the options that 6,600 is the level the market's going to have a trouble with, because this is now the resistance zone. So it's not really too interesting on the S&P. Probably where the interest is more is in Tesla, Nvidia, Bitcoin, crypto. Solana broke up again, which already was doing into the inflation figures. That's trending now on X. There's a lot going on there. Let's have a quick look here at Tesla. You guys can see that we've broken to the upside, which is pretty good. 400 will be, I think it's 380, 400 are the two targets. We've talked about it forever. Once you get through 350, and again, it's against the general consensus out there, which often makes it usually better. And you can see here that Nvidia is pressuring that 180. And if it breaks through, I think a lot of people are going to be looking at 200. I actually worked out the multiple for Nvidia, and I think it came in at about 280 if it hit the similar multiples. So I don't know if it's going to get 280, but interesting anyway that it's starting to get into that positive gamma territory. What about IBIT? Well, we talked about how we processed past 64, probably looking at a Bitcoin breakout, positive gamma. Could we be going to 70 on IBIT, which would equal near an all-time high? So near all-time high on Google. I think it probably would. And at the on Google, on Bitcoin. But I do think that that's looking a lot better. And that's clearly, playing the options game as well. So I noticed you guys in the comments really enjoyed the new addition to the Bitcoin options, and we'll continue to bring that. It is, after all, one of the highest options contracts in the market now. So we have to pay attention a lot to Bitcoin now. Wall Street's all over it. Semiconductors broke to a new high, which is, of course, a bullish sign in markets. It could be a trap. You could argue, but what if this is a UT? You don't know that yet. So you're not going to be able to do it. And you might say, but there's divergence. There's always going to be divergence. So again, at the moment, I'm taking it on face value. The market has picked up a little bit and broken up. You can also see here the American consumer, XLY versus XLP. So that is consumer discretionary is improving against staples. That's usually a bullish sign. And even things like healthcare have started to break up a little bit over the last 24 hours. So it's been a pretty broad pattern, which you can see here based on small caps to the SPY, certainly improving. And if we did a small caps, so we'll just put this in together now. We do a small caps to NDX, which is NASDAQ. You can see here, again, some improvement there in small caps over the last 24 hours. Yields remained relatively stable through the inflation figure. They went up, they went down, they kind of went all around. We'll do a special on that soon. A lot of people are saying, well, what's this mean for treasuries? Everyone's turned bullish on treasuries. And they have, of course, broken to a new high after 88. So the first target for those is going to be somewhere around 93. And then a lot of people will be looking at 100. We'll see whether we can get there. Dollar index. Looks like the dollar did break down. It hasn't gotten through 97 yet, but this is quite a negative candle. So the weekly close, I think, may be key here. And you can see these rejections. So weekly close, we'll update when we get that special report there for that. And gold continuing its way to 36.50 and to 36.50, but I think 37.50 before it consolidates. And silver, look at this thing, actually hit 42 during the time of this recording. That was a target we had sit on it, 42.43 a long time ago. So it's big news, but at the same time, it's dull. I don't short dulls. I always say they go up. So in my opinion, it's more than likely that the trend is still intact at this point. And again, practice risk management, do your stuff there, of course, with that stuff, guys. Energy stocks did start to repurpose themselves a little bit back up here. We can see they've improved. Not too many moves on energy stocks. they've suffered because of the inflation figure. And as we said before, Nvidia and semiconductors are looking quite a lot better. Nvidia had that kind of gap down, gapped up. It is possible it shorts here. Obviously, some people would scale in. We're looking for a 185 plus close to really take this stock into significant positive gamma. Speaking of gamma, we've got Tesla through 350, guys. So a lot of you will be happy with that. Close really strong at its highs. You have to think it's kind of going towards that 400 target at this point. May not, but again, stack the odds in your favor and things look better at this point. HSI, yeah, China's still bullish. Look at it go. Really nice stuff there in terms of what's happening with China and their liquidity. Of course, it's all their central bank just pumping basically. And you can see here, first major target almost incoming for the Russell. So it had a good 24 hours as well. And NASDAQ closed at an all-time high, but has also made an all-time high as well. So it's dull and moving up slowly. So maybe all those dark pools, they're just maybe early sells, who knows? They could just be also additional ads as people come in. Maybe the most interesting chart at the moment is the cryptos, though. We saw Bitcoin break through 113.5. That kind of potentially now opens up this type of thing, which is a pullback into a rally into an all-time high. That's something, of course, I'll be looking at quite closely. And the other thing is, of course, some other alts have gone crazy again, which is Solana and the likes. So Solana, you've got to be targeting 250 when you're looking at the charts like this. So things are looking pretty good when it comes to the cryptoverse, and people have, of course, started to pick it back up. Remember, guys, anything can happen. What you're all about is stacking the odds in your favor. If you're interested in finding out more about what we do, you can check out our sales on our courses. I'd have to suggest the advanced course if you want to know how we pick the larger macro side. And then, of course, you can check us out on X. Follow me on LinkedIn on Thomas Atkinson. And I hope you have a wonderful day. Thank you so much for watching, guys. We'll catch you on the weekend. And we've got another big week next week because guess what? It's huge options expiration. You know what that means, guys? Volatility's coming. All right, catch you for now. See ya.